Breaking news. The U.S. just released its largest monthly deficits in history. And no one's talking about the huge consequences this has on interest rates, the U.S. dollar, and the stock market. In May alone, the federal government ran a $316 billion deficit, which is the third largest monthly gap ever recorded. And over the past 12 months, the U.S. has racked up a $2 trillion deficit, which makes up 6.7% of the total GDP, the highest level since before the 2008 financial crisis. And at the same time, America's account deficits, which specifically track trade balances, just exploded by 44% this quarter, hitting $450 billion. And although a lot of the deficit can be attributed to businesses rushing to front-load imports ahead of the Trump tariffs, it's clear that there are deeper systemic issues beyond just short-term trade moves. Foreign investors are starting to require higher returns to justify the growing risks, and we can see that not only the S&P 500 is hitting all-time high records, we can see the Treasury yields are staying stubbornly high. Everyone sees the U.S. deficit and national debt as a ticking time bomb because eventually, those interest payments will catch up to the budget, and the Fed will be forced to choose between propping up markets or keeping the government solvent. Do you think Trump's tariffs will help solve the deficit, or will they only make things worse? Comment down below what you think.